This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Welcome to Bloomberg Businessweek Daily. We are across Bloomberg platforms. It is Thanksgiving Eve. It's kind of a Fed Wednesday.
Is it okay to call it that?
Yeah.
Ari, our producer, just got a little mad at me that I said it was Fed Wednesday.
I've been around the block a little bit. It's a Fed Wednesday.
If we're getting communications, if we're getting the Beige Book.
Well, you know why it's important? Because this typically comes out a couple of weeks before a Fed meeting, which we do get. Is it December 10th?
Yeah, 2 weeks from today. That's a real Fed Wednesday.
So, Ari, 2 votes to 1. We're right. All right. Listen, we're looking for those Beige Book headlines, so we're going to watch out for them, bring them to you as soon as they cross. Meantime, we've got stocks, for the most part, climbing, rising expectations for interest rate cuts, or maybe it's just people looking forward to tomorrow's turkey and stuffing. If you have not taken my pie survey on X, please do it now.
Okay. I didn't do that.
Yeah. Well, just get to it.
I'm guessing it's about pecan.
Pecan.
Okay.
Yum, yum, yum. But having said that, there's optimism, right, in the markets that we're going to get a rate cut. So we'll see whether or not the Beige Book gives us any clues. We got a lot going on in the next 60 minutes.
We do. Labor, inflation, tariffs, earnings, Black Friday, and more. Of course, the Beige Book, our economic roundtable with Bloomberg Stuart Paul and New Century Advisors Claudia Sahm. We're going to get cracking at that in just a minute.
So excited about that. Also, our latest CFO briefing with Bobby Leibrock of ACI Worldwide. They have... they see a lot in terms of payments and platforms, so we're going to see what he sees in terms of the U.S. economy. And then we're going to talk a little bit about what's going on between Russia, Ukraine, and what is the U.S. role. And I'm curious about who the U.S. ultimately sees as official allies and maybe other allies.
Well, that and more coming up over the next 60 minutes right here on Bloomberg Businessweek Daily. First up, here's Amy Morris in for Charlie Pellet.
All right, thanks, Tim. ByteDance bought more NVIDIA chips than any other Chinese company in 2025, but Chinese regulators blocked it from using NVIDIA chips in new data centers. The Chinese government's goal is to build a fundamentally different AI ecosystem that can withstand future U.S. tech embargoes and be widely adopted by other countries. Shares of NVIDIA right now more than 1% higher. Trading is muted, but stocks are higher as expectations rise for interest rate cuts next month. We check the markets for you all day long here at Bloomberg. The S&P 500 is up 0.8%. NASDAQ up 0.9%, and the Dow is 0.8% higher. The Russell 2000 index, small caps, that's up 1.1%. The 10-year Treasury yield at 3.99%, and the 2-year yield at 3.48%. Applications for U.S. unemployment benefits fell last week to the lowest since mid-April, remaining relatively subdued amid economic uncertainty, but continuing claims, those edged up, and that indicates labor market stress isn't quite over yet. And U.S. airlines getting ready for the busiest Thanksgiving travel time on record. There you go. More than 31 million passengers are expected to travel until December 1st. That travel period is affected by air traffic controller shortages, winter weather, fuel supply constraints, and tech outages. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec.
Amy, I feel your pain. It's just that kind of a day. All right, Amy Morris in there for Charlie Pellet. We'll come back to her a little bit later on. Hey, let's get to the Fed Beige Book. It is out. It's a qualitative summary. You know that. What's going on in the economy today based on info across the 12 Fed districts. It comes out approximately 2 weeks before a Fed meeting. And Tim? Yeah, last meeting is December 10th.
Well, we're getting some headlines right now. Economic activity was little changed since the previous report, according to most of the 12 Federal Reserve districts, though 2 districts noted a modest decline and 1 reported modest growth. Overall consumer spending declined further, while higher-end retail spending remained resilient. On the labor markets, employment declined slightly over the current period, with around half of districts noting weaker labor demand. For more, let's bring in Stuart Paul. He's Bloomberg Economics U.S. and Canada economist. He joins us here in the studio. So, Stuart, thanks to you, I was able to go through some of those Beige Book headlines. But what sticks out to you? The resilient spending among the higher income consumers is notable, and then weaker labor demand, or weaker labor in the market is notable to me too.
Yeah, so when I saw the line about resilience at the upper end of the income distribution, of course, I'm thinking about this K-shaped economy narrative that's so pervasive. But when it comes to policy, we know that FOMC members need to think about the economic aggregates. So then when we scroll down to the labor market, seeing employment declining, I think matters way more than resilience at the upper end of the income distribution. So if we have both spending in the aggregate declining, we have employment in the aggregate declining, and firms feeling as though they can only pass through about 20% of higher input costs, which we saw reported in the Kansas City district, my favorite district in the Beige Book. I think that, again, the balance of risk is skewed towards the Fed needing to undergird the economy, maybe needing to take that additional rate cut in December. And in fact, I think they're going to deliver it.
Does that say to you that the Fed has to cut come December?
I don't think that the Beige Book is a deciding factor, but I think when we see the unemployment rate rising in the September report, when we see employment declining through early November, which is what the Beige Book's survey period includes, when we have those factors front of mind for policymakers, I think that it's enough to get that cut.
Yeah, I'm seeing like things kind of hitting on both the dual mandate that maybe things need to be addressed.
Yeah, it's tricky. The Fed, we know, is not rushing to move into accommodative territory. And when we see the Beige Book citing prices rising moderately during the reporting period, including input cost pressures that are widespread among manufacturers, retailers, and when those are related to tariff-induced increases in input costs, it's no surprise that the Fed is trying to maintain this balance as best as it can.
Claudia Sahm also with us, chief economist for New Century Advisors. She's one of the best-known economists in the world thanks to her research she's done on recessions. We talk about, Tom always talks about it, Tom Keene, the Sahm rule, but we all do here at Bloomberg and what it tells us about the U.S. economy. She's with us from Washington, D.C. Stuart's going to stay with us. Hey, Claudia, you two have had maybe a few minutes, we hope, to go over the Beige Book. You've been listening also to Stuart Paul. What jumps out for you and what it says about the U.S. economy and where you think we are in the U.S. economy?
Right. Well, I think the Beige Book was going to be an important input to this discussion of like how resilient is demand. Because we've seen, we don't have our complete picture numbers. Like they're not going to get a GDP estimate even for the third quarter before they meet in December. So the Beige Book is comprehensive. It's qualitative, but it's structured. And it does give us a flavor across lots of sectors across the country. So I think it is interesting that, there's a highlight of the idea that the resiliency that we're seeing in some of the aggregates is being driven by higher income consumers. That does, the Fed acts on like the country as a whole. Like their mandate is a national kind of an aggregate mandate, but it really is important for them to understand, like if there's broad-based strength, that says a lot more than if it's just, one part of the economy is kind of holding things up. That's a much riskier place, even in when you're seeing good demand.
So Claudia, does anything in the Beige Book today change your view or change how the Fed should be looking at its meeting on December 10th?
So there, of all the data that they're going to have in hand, and the Beige Book was certainly something, that goes into that calculus. There's really not anything that's going to settle an argument, right? The employment report was mixed. I mean, you can, and I think in particular for even the people, say, Boston Fed President Susan Collins, who's one that sounds like she's probably not in favor of a cut in December. It's more of this issue. She just doesn't see the urgency. She doesn't see the deterioration. And we do know there is a whole, burst of data that got delayed because of the shutdown that the Fed will get before their January meeting. So I think there is a reasonable case of like, well, why not just wait until January? That's not what I would do if I were them, but I can completely see her perspective. And I would be very hard pressed, I think, to win someone like her over to cutting in December.
Now, Dr. Sahm, I think that you're right. It might be difficult to win over Boston Fed President Susan Collins. I'm glad that you brought her up. One of the most valuable things, of course, about the Beige Book is that we can see economic activity by district. And in this Beige Book, we see economic activity in Boston expanding slightly. Of course, I mentioned earlier in the program, I like to scroll down in the Beige Book right to Kansas City, because that's, of course, home of Kansas City Fed President Jeffrey Schmidt, the dissenter in October who was in favor of a rate hold during the October meeting. In this Beige Book, we're seeing Kansas City economic activity slowing. We're seeing growth slowing during the survey window with softer labor market conditions. So I'm wondering, when you tally up the votes, where do you end up thinking everything is going to shake out when it comes to December?
So I expect that we'll see a divided Fed come December. I don't think things are a done deal at this point. I suspect there probably will be a cut in December. That may be the last cut that we see from the Powell Fed, right? So just because you get in December doesn't mean we're like opening the gates for a whole set of cuts. But I think we are in all likelihood going to see more dissents, 4 dissents, maybe 5 dissents, which has not happened in quite some time with the Fed. I don't think that's a sign of a problem. I think it's a sign of there legitimately are reasons for the Fed to be conflicted. Inflation is still well above 2%, has been for years. There are still price pressures. The Beige Book talks about those costs that are still out there with businesses that could end up coming to consumers. And we have a labor market that, while it's slow, there's some signs of faltering, it's not going over a cliff at the moment.
Yeah.
Right. So I think there's a reason for them to disagree. It's a sign of they're really serious about their job and they're thinking hard about a tough problem.
I want to go to trade and tariffs in a moment, but I just want to follow up with you, Claudia. You said this could be the last cut of Fed Chair Jay Powell's tenure. That tenure expires May 2026. I'm looking at 2026 Fed meetings, and we have got 3 meetings, January, March, April. Are you saying that we wouldn't get any more cuts because of the debate or because the economy won't need it?
So inflation is elevated.
Yeah.
Right. And I think it's probably going to be until the middle of the year before we really see inflation kind of turn down, the tariffs work their way through, before we can, really point to data and be like, look, it's going back to 2%. Right. So it's going to take some time for that to work through. And the Fed, when inflation is elevated, they're going to want to be putting some restriction on the economy, right? So every cut they do takes a little bit more restriction out. And we can argue till the cows come home about what the quote unquote neutral rate is. But if you're cutting, you're getting closer to it. So every cut is going to be harder to negotiate with inflation still elevated. And so I think that's where you could, get to a place where if inflation's still high, unless you see clear deterioration in the labor market, which I very much hope we do not see, because that would be very bad. But that could be a game changer in it. But if we continue this kind of muddle through, they really could do a pause for some time. And, I think, and that could be because again, inflation has been sticky above 2%.
Claudia, you mentioned price pressures and the word tariff in the Beige Book appears 47 times. Most of them, or many of them, in the prices section. Are how far into the economy or into these numbers have tariffs made their way? Have we seen the full effect of them yet? Are we seeing half of the effect of them right now? Can you measure that?
Right. So, there's absolutely a cottage industry out there of different estimates of the pass-through of tariffs. We don't see them on the price tags, right? We can't just measure them. These are all estimates. And frankly, it has been surprising how slowly some of these tariff effects have shown up. It's pretty clear goods price inflation really picked up this year after having, come down quite a bit. So I think we can look at the data and say tariffs are in there. They are moving prices up for consumers, maybe not as much as we'd expected. I think there is this concern that you hear from the hawks, which is a reasonable concern, that, say the economy were to pick up next year, particularly, all the tax refunds come out and maybe, some of the uncertainties wane. If we have, more robust demand, that may be the opportunity businesses have to pass those costs through that they're still sitting on, right? There is this interaction between the demand environment and kind of how the cost pressures show up in inflation. So the fact that they're still kind of sitting with businesses does kind of raise some concerns about, eventually consumers pay these kind of things.
Yeah, there's for so long they'll sit on it. Hey, both of you, Stuart and Claudia, sit tight for a second because you mentioned we're talking tariffs and trade, and I want to bring in Brooke Sutherland, Bloomberg News Boston bureau chief. She is also a writer for the Bloomberg Industrial Strength newsletter. Because I want to talk about Deere, which is down almost 5% in today's session. It's the world's biggest farm machinery maker. Weak forecast for the year, and part of that is because of the U.S. farm economy. There's a lot of uncertainty over the impact of tariffs and trade deals. And so we're seeing that play out in Deere. Brooke, what do we need to know specifically, when it comes to Deere, always company-specific info, but also the commentary more broadly about tariffs and trade on an impact on a company like Deere?
Sure. I mean, I think the good news is that Deere is calling for a bottom in the large agriculture equipment market next year. But the bad news is that, you're still looking at declines in that business and for the industry overall. And I think that just reflects, while there is some optimism that China resumes agricultural purchases from the U.S. In greater volumes than it has been lately, it's not very clear exactly what that looks like. And, there's a lot of ambiguity around that trade framework that the U.S. and China struck and what that will ultimately mean for U.S. farmers. There's been a lot of talk about an aid package from the Trump administration for U.S. farmers, but it is, again, not exactly clear what that would amount to and, whether or not it would be, enough to really help farmers get through this period, or if it ends up being more sort of a temporary Band-Aid. And so I think there's just a lot of uncertainty. There's a lot of, Deere itself is still working through tariffs and, picking up on what Claudia was saying. I mean, it is difficult to pass on those price increases at a time when you're seeing a period of weak demand for Deere's equipment. And so I think, going into next year, one thing that investors are really going to be watching is Deere's margins and its ability to protect that profitability, even if you don't see a really significant demand resurgence.
Brooke, briefly, is the Deere story idiosyncratic, or can we extrapolate it as some sort of bellwether for industrials or the economy?
I mean, I think if you look at the broader industrial economy, it's really two stories. So you have the companies that are supplying the AI data center boom, and that's things like electrical equipment and certain types of HVAC equipment. And then you have pretty much everything else. And everything else has been in a downturn for really a very extended period. I mean, if you look at the ISM manufacturing index, I mean, I think this is the longest period of weak demand, that we've seen ever. And its tariffs have really prolonged this, where investors were looking for a recovery there this year, and that has not played out, largely just as companies work through these higher costs. But you're seeing a lot of reticence in terms of CapEx spending outside of the AI data center boom, just because companies aren't sure what the ground rules are. They don't know what things cost. They don't know where to spend the money. And so you're really seeing that hesitancy elsewhere in the industrial sector.
All right. Always appreciate it. Our Boston bureau chief, Brooke Sutherland, follows the industrial space so well. Brooke, have a good Thanksgiving. I want to wrap up with Stuart and Claudia. Claudia, to you, just listening to what Brooke had to say, I mean, do you feel like there's more clarity about the U.S. economy at this point, or is there still a lot of things, whether it's from the White House or elsewhere, that could come at us? And just got about 45 seconds.
I think broadly there is more clarity than, say, back in April. I think we've really weathered several storms in terms of rapidly changing policy landscape, and yet things are still really uncertain. I mean, you have a Supreme Court that is going to rule on many of those tariffs that we were just talking about. We have a Supreme Court that's going to rule on the ability of the president to remove a Fed governor. So there are still some major question marks out there that could have big implications for what next year looks like.
And 45 seconds for you too, Stu.
I think that Claudia is right. There's a lot of uncertainty right now out there in the broader economy. I think that the downside risks to the economy are mostly posed by things like tariffs remaining in place. A lot of the policy decisions that we're likely to see and a lot of the policy outcomes that we're likely to see over the next year or so actually, I think, skew risks to the upside. So where the uncertainty lies is in whether the current condition can remain. And I think that the actual uncertainty skews risk toward an even larger expansion.
All right, so we'll just take a shot for every time we hear uncertainty this Thanksgiving holiday, because it sounds like that's the watchword. You guys are amazing. Bloomberg Economics U.S. and Canada economist Stuart Paul, Claudia Sahm, thank you, chief economist for New Century Advisors. So appreciate it. Hey, coming up next, we get a view from the C-suite. We've got the CFO of ACI Worldwide. That from Bloomberg Businessweek Daily continues on this Wednesday.
It's 2:21 on Wall Street. I'm Amy Morris. The Beige Book shows economic activity was little changed since the previous report. The Fed says overall consumer spending declined, and some retailers noted that the government shutdown did have a negative impact on consumer purchases. Employment declined slightly over the current period, with half the districts noting weaker labor demand. We check markets for you all day long here at Bloomberg. The S&P 500 up 0.9%. NASDAQ up 0.9%. The Dow up 0.9%. The Russell 2000 index, small caps, that's up 1.2%. The 10-year Treasury yield at 3.99%. The 2-year yield at 3.48%. Elon Musk says Tesla aims to roughly double the size of its robo-taxi fleet in Austin next month after some fans complained that soaring demand from new users left the service pretty much unusable. Musk posted that comment on X and told investors last month that he wants self-driving taxis on the road in 8 to 10 U.S. metro areas by the end of the year. Shares of Tesla now more than 1% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's Bloomberg Business Flash. Let's go back to Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec.
I want self-driving taxis too, but I'm just going to weigh in on that. You know I do.
I know. Well, apparently they've been spotted around the New York City area, the Waymos, but they have a person
in it.
You know, they're just getting the lay of the land. They're doing their thing before.
Bring it on.
We'll see. We see if Waymo can take New York.
Yeah, exactly. We'll see if the nation's airlines and trains and planes and automobiles, if they can kind of take all the travel that's coming our way this Thanksgiving. The season is underway. The global e-commerce and payments platform company ACI Worldwide says friendly fraud is expected to increase 25% between Thanksgiving and Cyber Monday. That's according to an analysis of billions of transactions of global e-commerce businesses. That's what they do. They see a lot. Joining us with more is, and kind of on that story as well as their business, in our latest installment of CFO Briefing is Robert Leibrock. He is CFO of the more than $4.8 billion market cap company ACI Worldwide. The stock, by the way, down about 9% year to date. And also with us here in studio is Nina Trentman. She's Bloomberg News senior editor. She writes the CFO Briefing newsletter, which you can subscribe to at bloomberg.com/CFO Briefing. A new one comes out every Sunday. Bobby, welcome. Nice to have you here with all of us. I'm not sure everybody's familiar with what you do. Share with us a bit on what the company does, who are your customers, the type of categories, so that our investing audience has a good picture of what your business is all about.
Yeah, that'd be great. And thank you for having me, Carol. I think, as you described earlier, we're right at a peak season for our company. We're right in the middle of all of the payments that run through the economy, not just here in the U.S., but around the world. And as you think about what ACI does, it's the infrastructure of payments. You know, we know around computing, there's cloud, there's data centers, there's the edge. Around payments, we are the infrastructure that does that across all the banks, all top 10 banks, 60 of the top 100 banks, also across 3,000 customers here in the U.S. that need bill pay technologies. If you paid your U.S. tax bill, you've probably used our platform, your insurance bill. And then a big, this weekend actually is when you talk about friendly fraud and the uptick we're seeing there. We service 80,000 merchants globally with our technology around payments there. And as you step back, where ACI really comes in is a mission critical layer of software and as a service technology that allows them to scale, provide the reliability, the fraud detection that you need across those. As you think about what we can do across those platforms, it is perfect to come in, on the Wednesday here before Thanksgiving here in the U.S. Like I said, it's a big peak season. As we look at the transactions at this time of the year, they were up more than 25% last year. We're expecting that to happen again this year through our platform. There's lots of fraud that can come along with that. It's one of the areas we're infusing AI into that for these merchant providers. As you think across ACI, you mentioned almost $5 billion market cap, almost $2 billion in revenue, that we have globally with a very healthy performance underneath that, about $500 million in EBITDA. I joined just under 6 months ago, so relatively new to the team here. And think about what we do. It's really a big reason on why I joined. I was excited to come in the middle of a company that's mission critical to everything we do around payments and the ecosystem and the economy. But the other equally important part of why I was excited to come was we're a 50-year-old company that's rapidly transforming. About 2 years ago, we had a new CEO come in, Tom Warsop, and he's really jolted the company, increased our growth about 2x. We grew 10% last year. We're on track to 9 to 10% growth this year. And as you look at that, the other big jolt was innovation. We have a new platform that we're bringing out around cloud native. It's our ACI Kinetic platform. And those were two big things that got me excited to join this team and the transformation we're on.
Thanks, Bobby, for joining us here. Nina here. Just wanted to actually follow up on the data that you have from your business. We earlier talked here on the program about the K-shaped economy and the divergence between sort of affluent spenders in the U.S. and those with lower incomes. Is that something that's reflected in your numbers, and what are the trends telling you for this holiday season?
Yeah, I think good question, and good to see you again, Nina. I think underneath of that, and let me provide the global scale of ACI. We operate in about 90 countries globally, and our banking business is actually about 75% outside the US. And as you think on how that's developed, a lot of it has to do with, Nina, how we're servicing economies that are either undercredited or underbanked, and giving them the ability to do digital payments through a debit transaction or other types of electronic payments is really important to our culture and our mission. So as we go do that, we're seeing good demand across Asia, Latin America, for these different payment schemes and real-time payments to provide to those folks. As you think about this season, I mentioned this is a peak season. We think the shift more and more towards digital payments is continuing to happen. We see that through our platform. When we last talked, I mentioned on a year-to-date basis, we're growing 12%. So really nice demand, and that's across both of our businesses here in the U.S. or internationally as well, as you look across our payment software business.
Yeah, just curious, actually, do you see this growth in buy now, pay later transactions that we've seen across platforms is also that's showing in your business?
Yeah, and I will say, I mean, our business is largely agnostic to how you want to pay, but that is a good reason why to use a digital electronic payment versus, let's say, cash. And the ability to do that, it's one of the reasons we're taking good market share within our bill pay business. This is a business that we've gotten it from lower to mid-single up to market share levels at growing 12%. And to the point of your underlying of your question there, that is providing more payment types is why a lot of customers in this space are choosing to no longer write their own bill pay technology in their app or their website, but come to a leader like ACI to do that for them. That can give them more options around pay later, use credit, use other forms of payments as well.
Well, on that, Bobby, we actually had Tom Morsup on Bloomberg Crypto just about 5 weeks ago, back in the middle of October. He was here in the city to talk a little bit about stablecoins, speaking of different types of payments. And I'm wondering how big of a business at this point you see that getting, use of stablecoins, especially for cross-border transactions. Do you see it sticking?
Yeah, I think I think he said that, you and him were talking about the death of cash is greatly exaggerated, right, when he saw it. And admittedly, what we were trying to, lean into there was we don't see, any one payment type really going away. And I think that's the reason why there's such a need, as stablecoin sees more adoption, continues to ramp. As you look underneath of that, it's definitely an emerging payment type, provides, faster, cheaper, more transparent ways to transfer money, particularly cross borders, like you mentioned. But it adds a ton of complexity for our customers. To add this as an additional payment type, it's one of the core reasons when we went out and surveyed 200 customers about 2 years ago, we asked them, where should we invest? It was a very customer-oriented product market fit for our new platform, ACI Kinetic. And this is a payments hub. It doesn't bias one payment type, one rail. It can lean across all these payment types. It helps you orchestrate them, because the complexity of adopting stablecoin, you see a lot of banking announcements on either their own stablecoin or their ability for tokenized deposits. It's great optionality. And in ACI, we love the idea of giving consumers and more optionality and choice and flexibility. But that provides a lot of complexity for our customers, which is where they need our help and is right in our sweet spot.
Just wondering, actually, in terms of stablecoin payments, is that consumers using those on your platform? Is it business to business? What is that looking like?
Yeah, I think so as you think of our multiple platforms within our bill pay, our merchant business, we've provided the option. We had a strategic partnership with BitPay that we announced last quarter that unlocks the ability to use those across those platforms. If you think of our critical banking business, that's really a mission critical layer that banks are using around the world. Those volumes, we have the capability there. We have the payment infrastructure. We support stablecoins, tokenized deposits as a new payment type, the interoperability. Most of the volumes I see there, Nina, are within the crypto universe themselves. It's going from a highly volatile cryptocurrency. And if you want to get the stability to move that, you'll see a transaction of going from, a Bitcoin over to a stable coin. We don't see a lot of transactions yet, compared to we do billions of transactions every single day with trillions of dollars attached to those transactions. And within those, there's still more across the traditional payment types that we see within our banking data.
Hey, we kicked off, Bobby, our introduction to you talking about the so-called friendly fraud expected this holiday shopping season. And in particular, we're looking at the weekend and all the way through. How much risk is there from this, and especially when customers dispute transactions following a purchase?
Yeah, I think, friendly fraud for, folks is a new term too. This is things like wardrobing, buying something, wearing it for a long time, returning it, or, stolen goods that you try to return to the provider. And they're getting more and more sophisticated.
It's terrible.
And admittedly, this is, yeah. This is growing upwards of 25%. And if you think of the average return, it was about $150, if I remember last year. It's up to about $200, the average transaction that's going through these types of friendly fraud. We have a platform. So I talked about servicing 80,000 merchants globally, through our product and our software there. We have payment intelligence, and we can get up to 98% prevention within that space. So it's really a big value add there. And we talk about, I'm a believer in, the use cases around AI. And this is one of them that I love talking when I'm meeting with investors, because it shows them a real life example around where our customers are seeing an ROI on reducing this friendly fraud with the capabilities we have on our platform.
Maybe we should all take an ethics lesson. I don't know.
I hadn't heard that.
I hadn't heard it.
I hadn't heard friendly fraud before.
Right? It's just, oh my gosh.
You know it when you see it.
You know it apparently when you see it. Yeah. Hey, listen, Bobby, thank you so much. We really appreciate it. Happy Thanksgiving. Bobby Leibrock, he is CFO of ACI Worldwide. Nina Trentman, thank you always. Happy holidays. Bloomberg News Senior Editor. She writes the CFO Briefing newsletter. You can find it at Bloomberg.com/CFO Briefing. And for more Bloomberg coverage of CFOs, be sure to check out the latest episode of the Chief Future Officer series. It features the CFO of Standard Chartered Bank, Diego De Giorgi, on his major role in the bank's expansion into digital assets and how AI is changing the job of CFO. You can watch Chief Future Officer right now on Bloomberg.com and, of course, on YouTube. Coming up, we switch gears, geopolitics, Russia-Ukraine war, the role of the U.S. That's next.
It's 2:40 on Wall Street. I'm Amy Morris. Gold and copper advanced on rising expectations of a Fed rate cut. Stocks are higher. We check markets for you all day long here at Bloomberg. The S&P 500 up 0.8%. NASDAQ up 0.9%. The Dow up 0.8%. The Russell 2000 index up 1.25%. 10-year Treasury yield at 3.99%. The 2-year yield at 3.47%. Spot gold up about 0.9%. Trading at more than $4,100 per ounce. Copper up now 1.4%, and Bitcoin now up more than 3.3%. American households paying more than ever before for electricity after prices surged the most in almost 2 years. The U.S. Energy Information Administration says the average retail price for electricity jumped 7.4% in September. That is the biggest gain since December of 2023. Power costs are expected to climb even higher in 2026, with transportation and commercial customers seeing similar trends amid rising fuel costs and increased demand. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's Bloomberg Business Flash. Now back to Bloomberg Businessweek Daily with Massar and Tim Stenovec.
All right, Amy, so appreciate it. Well, President Trump dispatched top negotiators, including Special Envoy Steve Witkoff, for additional high-level meetings with both Russia and Ukraine, but said he would only be willing to meet the leaders of those countries if talks yielded a so far elusive pact to end the war. The president telling reporters, Tim, he had no deadline for an agreement.
Yuri Yushakov, an aide to Russian President Putin, said he speaks often with Witkoff, but declined to comment on a Bloomberg News report that U.S. Envoy Witkoff advised the Kremlin aide in an October 14th phone call on how Putin should broach the issue of a peace plan with President Trump. His guidance included suggestions on setting up a Trump-Putin call before Zelensky's White House visit later that week and using a recent Gaza agreement as a way in. The president was asked about the reported conversation between Yuri Yushakov and U.S. Special Envoy Steve Witkoff last night on Air Force One.
That's a standard thing, because he's got to sell this to Ukraine. He's got to sell Ukraine to Russia. That's what a deal maker does. You got to say, look, they want this. You've got to convince them with this. That's a very standard form of negotiation. I haven't heard it, but I heard it was standard negotiation. And I would imagine he's saying the same thing to Ukraine, because each party has to give and take.
That was President Trump last night on Air Force One.
Well, delighted to have back to talk about all of this, Elise Giuliano. She is senior lecturer in political science at Columbia University, director of graduate studies at Columbia's Harriman Institute for Russian, Eurasian, and East European Studies, and director of the program on U.S.-Russian relations. She is here in studio. So great to have you back with us, Elise. So I want to ask you, this Bloomberg exclusive reporting on the conversation between Steve Witkoff, special envoy here in the U.S. for the president, and Yuri Yushakov, an aide to Russian President Putin. Is this standard form of negotiation? Is this normal diplomacy, especially among non-ally countries?
Mm-hmm. Well, yes, President Trump used the word standard, but usually what's standard is that you talk to your ally when you are trying to negotiate a ceasefire or an end to a war involving your ally. And Ukraine is the U.S. ally. But here what it looks like is that Witkoff actually, in a way, took Russia's side by telling Russia that they should call Trump prior to the meeting with Zelensky in the White House back in October. So that looks like the U.S. is choosing sides and choosing the wrong side, since it's Russia that attacked Ukraine and Russia that has been an adversary state of the U.S. for many years now.
So in your view, how does it affect peace negotiations?
So it can be very dangerous when you have a negotiator who doesn't understand the war or Russia or Ukraine. And Witkoff worked in real estate in New York. And so he, it seems to me, conceptualizes this conflict as a war over land or territory. And that's not necessarily a crazy assumption. There are a lot of wars over land or territory. But in this case, it's wrong. This is not, Russia doesn't need the land or want the land. What they want to do is destroy Ukrainian sovereignty. And this is Putin's goal. It's been his goal since 2022, and he continues, I believe, to seek that goal. So, giving a little bit of land, this is what Witkoff suggested, that we can get to a peace agreement by giving up some territory, some land. It's not really what Russia's interested in.
That is an important distinction, because I think even we say it's about Putin expanding a land grab, right? So the difference is going back to the way USSR, what is it about really for President Putin?
Well,
why is it that Ukraine makes him so frustrating that it has its own independent nation?
Right. So this takes a little bit more time to explain than we have.
Sorry.
But I guess I would say
this is a whole semester, right?
But I would say two things we can sort of summarize is that, number one, Putin wants Ukraine to still be in the neighborhood of Russia and a close ally of Russia, and that means an authoritarian kind of oligarchic state. It doesn't mean a member of the EU or NATO or a democracy or an ally of the US. So keeping the West out of Ukraine is the fundamental goal of Russia.
What is Putin so afraid of? Why is that so important?
Having a large, powerful democracy on the border. And then there's this personal element as well, personal oligarchic friends of Putin who were expelled from positions of power in Ukraine over the past few years, as well as this concept that Ukrainians are not a nation, they're not a separate people, and they don't deserve statehood. They are little brother Slavic little brothers of Russians. So this is why they're kidnapping children and taking Ukrainian children and saying you're actually Russian.
Does it make you think differently about the U.S. relationship with Russia?
It has worsened the U.S. relationship with Russia. It was already an adversarial relationship, as I mentioned, but now it's much, much worse. We see Americans arrested and used as just pawns in trades that Russia, as political prisoners. We see lack of any kind of diplomacy with regard to other countries in the world or other formerly common interests that the U.S. and Russia shared. So we seem to be entering a kind of deep freeze in relations with Russia, and it doesn't look like a kind of ceasefire or peace agreement is going to change some of those underlying issues.
So, God, here we are in our 4th year on this war. I remember when it broke out. So does it mean that this is a fight to the bitter end? It feels kind of bitter if I look at the devastation in Ukraine, people, places, if you will. So is a peace plan even possible?
So I would say, it's good that the Trump administration is talking.
Yeah.
But the goal of Ukraine and the goal of the U.S. initially was to kind of find a ceasefire agreement and then take the time and the real hard work of diplomacy to reach a peace agreement, a peace treaty. These aren't usually documents or agreements that are reached quickly.
Right.
So a ceasefire agreement would be wonderful. Ukrainians continue to suffer. They continue to die. I was just talking to my Ukrainian friend, and she said that beyond not being able to sleep at night because of the huge number of drone and missile attacks that have increased this summer, she sometimes can't go to the hospital for her medical care because there's no hospitals closed, and you never know when it's open or closed. So there's this, tragic ongoing human element, and there are reasons why both sides might want a ceasefire at the present time, but there's also this kind of intransigent position of Putin, which is the goal to undercut Ukrainian sovereignty and statehood. And I don't think he's moved off that goal because I think he still believes he can make progress on the battlefield.
Well, if we think back to when this war started, there were many observers who thought it would be over within a week and Ukraine would have to cede to Russia. That did not happen, and we have no idea when it will end. But just in the last 30, 40 seconds we have with you, can you make a prediction on how it could end and when it could actually end?
Well, it's a war of attrition right now, and it's a drone war. And it does look like Russia's slowly making progress, but war is very unpredictable, and Russia's facing a lot of economic problems due to Ukrainian drone attacks on its energy and oil infrastructure. So both sides, like I said, do have an interest maybe in bringing it to a closer end, but I don't see that happening within the next 6 months or year. I could be wrong, things are unpredictable. And I think it's good that the Trump administration is talking to Ukraine and they're making progress on some issues. So they're hammering out what aspects of a peace agreement Ukraine might compromise on, and they likely will have to compromise on some territory. But they cannot compromise on what Russia is asking for right now because Russia could.
I know already we're going to be coming back to you because I feel like I still have a million questions. Elise Giuliano, senior lecturer at Columbia.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we're very close to the last hour of trading on this Wednesday, November 26th. Carol Massar, Tim Stenovec, and just looking at the trade right now, just a reminder, folks, we are up 0.8% on the S&P 500, same percentage gain for the Dow Jones Industrial Average, up more than 400 points on the Dow. Nasdaq 100 up 240 points, Tim, almost a 1% gain here.
Yeah, in the S&P 500, the only industry groups that are in the red today are healthcare and communication services. Information technology up 1.4%, materials up 1.4%, utilities and energy are up to the tune of 1.3% each.
But it's a rally.
100% of the stocks in utilities and energy are higher today.
That's interesting.
Yeah,
that's kind of
it's an interesting trade.
A more cautious, conservative trade.
Yeah.
Right?
Funny to see that along with information technology surging.
All right. Always stuff on the move. I'm Carol Massar along with Tim Stenovec. Let's get to some stocks on the move on this Wednesday. With us is Bloomberg News earnings specialist Rachel Phua with us. She's got some stock movers. Where shall we begin?
I think we have to start with the one reported today, Deere. Ticker DE. This is your farm equipment maker. So it seems like investors are reacting negatively after the company put out a weak outlook. It has been struggling because tariffs have hurt demand for crops. And I think this outlook kind of shows doubts about whether the U.S.-China deal to resume crop shipments will meaningfully boost demand. And we know the industry has already been dealing with a couple of issues. Crop prices have been low and the cost of seeds, fertilizers, equipment keep rising. So it kind of shows that farmers are having a tough time affording new machines right now, and that's hurting Deere.
Yeah, this is we talked to Brooke Sutherland earlier on this, and, asking the question of whether there's a bellwether in industrials and what this means for the farm economy, and also how the outlook could change if the farmers do indeed in the U.S. get a bailout from President Trump.
And I think this is what's difficult, right? The trade, the tariffs, like things feel like they're constantly moving. And so you have to kind of try, how do you run a business when the targets keep moving? All right, Deere, as you said, down more than 4% in today's session. HPQ, those earnings came out late last night.
Yeah, and it seems to still be down because it issued an outlook that's below expectations. HP blamed the high cost of memory chips that go into computers. It also became the latest company to report layoffs that are due to AI. It said it will cut 4,000 to 6,000 employees over the next 2 years and replace them with AI tools. That's about 7 to 10% of its current workforce.
You know what I find fascinating about this is, like, this is through fiscal 2028. We're a few years away from fiscal 2028. So you could do this through layoffs. You could do it through not hiring when people leave, and there are other ways to do this. But also the AI, think about how much AI has changed just in the last year and the way that people use it. Like, how can you predict how a company that you run is going to be using AI in the next 2 or 3 years?
I feel like there's so many unknowns. Like, these projections, I think, are really difficult to put out there, right? I feel like a lot could change. TBD.
Yeah.
Which is something I like to say a lot.
It's a volatile world.
Workday.
Yeah, so this is Workday, ticker WDAY. It's an HR software maker. It's another stock that took quite a bit of a beating today. It actually had results that beat estimates, but there are questions from analysts about how much of that is from an acquisition they made in October and how much of that is organic growth. Analysts are also concerned about its margins going forward because it gave a guidance that was below estimates. For example, Bloomberg Intelligence, pointed out that large companies are cutting workers or not hiring, so it's going to be hard for Workday to find new clients.
What? I don't know what to do. What?
Yeah, that's a big concern. I mean, it's like a big concern about the economy.
Yeah, exactly. I mean, it's such a great read, right? When we talk about the labor force. I mean, the stock's down about 17% year to date. I just feel like, and I think about the conversation that we had today, looking at the Fed Beige Book, and we're looking at a lot of different factors and what these types of companies say about their environment to try to get an idea of what's to come. It's a weird time, right? There's lots of questions.
Yeah, I think it's just no one knows, right?
Yeah, and when's the next earnings season?
Well, it's going to be soon after Christmas, right?
Yeah, mid-January.
Get ready for JP Morgan, okay? Starting, in the early part of January.
Just say, not that I'm trying to rush.
You're already thinking about that. We're barely through retail earnings at this point, Carol.
I just think, it's when we get an idea of how things are doing. Stock market kind of.
The terminal says January 13th for JP Morgan right now. All right. So, yeah, we'll see if that.
Will Jamie use cockroach? Will he use
weather
praying
metaphor?
Mantis?
This is not yoga.
Okay, I'm just saying. What bug will he lean on? Rachel, thank you so much. Really appreciate it. Rachel Phua, she is Bloomberg News earnings specialist, joining us with Stock Movers. They are 5-minute episodes of the biggest winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcasts.
Well, a lot of winners in today's trade. The S&P 500 up 0.9%. 411 stocks in the S&P 500 are higher, while 92 are moving lower.
That's broad-based,
That's very broad-based. Yeah, the NASDAQ up right now close to a full percentage point. What is moving to the downside in the S&P 500, the few stocks as far as, what's in the red right now by market cap? You can see Amazon down ever so slightly, 0.4%. Alphabet is actually down today, interestingly enough, after
having quite a run.
Yeah. Close to 70% this year.
It's like unbelievable, the outperformance there. Hey, Russell 2000, you pointed it out a lot yesterday. Some outperformance again in today's session. It's up about 1.3%. And you want to see some outperformance? Just head to the SOX, the Philly Semiconductor Index. It is up about 3.3%. If you're watching on TV, the close is coming your way in just a moment. Tim and I continuing on Bloomberg Businessweek Daily.